Every year, millions of American homeowners quietly overpay their property taxes, sometimes by thousands, just because they never question what's on that bill. What most people don't realize is that property assessments are estimates, not absolute truth. Counties make errors all the time, and those mistakes cost homeowners billions every year. Property taxes are calculated by multiplying your home's assessed value by the local tax rate, but the assessed value is often outdated or flat out wrong. According to the National Taxpayers Union Foundation, nearly 60% of all property assessments contain errors, and most homeowners never appeal them. If your property is assessed higher than its real market value, you're literally paying tax on money you don't have. To check if you're overpaying, visit your county appraisal district website, look up your home's assessed value, and compare it with recent sales of similar homes in your neighborhood. If nearby homes sold for $420,000, but your county lists yours at $490,000, that's a clear overassessment, and you can legally challenge it. To file an appeal, submit a notice of protest or assessment appeal. In Texas, it's through the County Appraisal Review Board. In Florida, it's the Value Adjustment Board, VAB. In California, it's the County Assessment Appeals Board. Deadlines usually fall between April and July, and you can use comparable sales or photos as evidence. Many homeowners win appeals without even needing a hearing or a lawyer. Each state also offers tax breaks that can dramatically lower your bill. In Texas, the homestead exemption removes $100,000 from your home's taxable value for school taxes. Florida's Save Our Homes cap limits annual increases in assessed value to 3% or inflation, whichever's lower. California's Proposition 19 lets seniors, the disabled, and disaster victims transfer their lower tax base to a new home up to 3 times. Illinois, New York, Georgia, North Carolina, and Ohio all have local exemptions worth checking out. For Texas homeowners, IRS Form 5114, the Residence Homestead Exemption application, is free to file and stays valid as long as you live in that home. On the federal level, you can still deduct up to $10,000 combined for property, state, and local taxes through the SALT deduction. When you appeal, stick to facts. Provide at least 3 comparable home sales within 6 months and include evidence like photos or repair estimates if your property has issues that affect its value. If you lose once, you can refile next year. Most homeowners win after refining their evidence. Property taxes aren't fixed, they're negotiable if you understand how the system works. Double-check your assessment, claim your exemptions, and never assume the county got it right. If you want more real homeowner tax strategies, not clickbait, not loopholes, just straight facts, subscribe to Tax Hacks US. Because in 2025, saving money isn't about cheating the system, it's about understanding it better than anyone else.